won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, we're going to be going over a Zoom call recording that I had hosted with the CYPRX students, breaking down a 160 pip trade that we had sent to the CYPRX students well in advance. If you all enjoy deep technical analysis dives like this, make sure that you smash that thumbs up button, subscribe to the YouTube channel. While watching this video, get out your pen and paper, make sure that you all are jotting down notes on how it is that we analyze the markets here at CYPRX. If anybody's interested in learning our strategical approach to the markets that we take here at CYPRX, that link for our mentorship program is in the description down below. As always, be cognizant, be aware. Without further ado, let's jump into the charts.
What is going on, everybody? Hope that everybody's had a fresh, brand new start to the new year. So far, so good. In today's video breakdown, I'm going to show you guys the entire trade analysis leading up to a message that I sent you all in the group chat way ahead of the curve. As always, giving you guys the realist price action analysis before it plays out. If you all don't pay attention to the analysis that I sent you all in the group chat, I usually send it in the general chat and in the GPP-JPY chat. I do not send an analysis unless I'm like 95 to 98% sure that it is going to play out. I have at least 10 confluences before I send you guys a trade analysis, just to make sure that, again, how I trade the markets reflects in the analysis that I give to you all. So I'm going to go over that here today. We're going to be talking about first fundamentals. Then I'm going to go over, setting up my areas of interest on the higher time frame, logical take profit areas, what I was seeing in the market leading up to this trade analysis. So it's going to be more of a lengthy call. This was the first trade that I placed into the new year, already up 3% on my portfolio. All right, so let's dive in. Let me share my screen with you all. So the analysis that I sent you all ahead of the curve, this was during yesterday's, I believe, Asia session. I sent it at roughly about 2 hours, maybe 3 hours, 9 p.m. before the London session started, okay? And I said to you all, if GBP-JPY can hold above 154.00 and buyers come in, I will be looking for intraday trades into 159 to 160. Those targets have yet to come into fruition. However, we did see a nice buying opportunity play out, which I'm going to go over today. If at any time we break and close bearish below 154.00 on the 4-hour chart, again, paying attention to that higher time frame bias, I will reevaluate. As of right now, I'm looking for price action to come into my area of interest, which I identified in the screenshot to you all. And I will be looking for a nice entry point. I will be monitoring price action, I said to you guys, during London and New York session over the next few days, not financial advice, obviously, okay? Now, you guys can see how price reacted after I sent that screenshot. We dropped straight down into that 155,600 psychological level that I sent you guys in this screenshot, okay? And we had a beautiful reaction to that. So we caught over 160 pips. I believe a couple of the other CYPRX students caught this trade as well. So this is the trade that I'm going to be going over in today's video breakdown. So let's jump over to the analysis. First, I want to talk about this major sell-off. We're going to go to the 8-hour time frame. And I want to talk about why GBP-JPY just experienced this massive sell-off based off of some of the fundamentals that came out in December, right? So up here in this general vicinity, once GBP-JPY started to sell off, on around the 15th of December, we saw a dovish rate hike from the Bank of England of 50 basis points, which was a little bit less than expected. The market was expecting and anticipating a 75 basis point rate hike, so that caused sell pressure. And then we also saw on the 19th of December, which I sent you all a screenshot of, the Bank of Japan announcing an unscheduled bond buying operation. And that came out on the 20th of, well, I believe it came out on the 19th of December, but you can see here this article came out on the 20th. So again, fundamentals surrounding monetary policy moving the FX markets. And then around that same time, so we see a dovish perspective from the Bank of England, or we're starting to see that dovish perspective from the Bank of England take place that I mentioned and talked to you guys about towards the end of last year. We also saw these headlines sweep the news, which also came out around the 20th and the 19th, which was the UK economy to be in a recession for all of 2023. Now, obviously, of course, when these type of headlines sweep the headlines, right, investors are going to flee to safe haven assets, for example, the Japanese yen. And you can see when all of these fundamentals came out. We have the December BPS rate hike. We have the 19th of December, the Bank of Japan announced scheduled bond buying, and we have the recession scares flooded the news headlines and investors flee to safe haven assets. So you guys saw the depreciation of the Great British Pound and the appreciation of the Japanese yen, and we experienced a major sell-off heading into the end of the year 2022. So why was I buying in this general vicinity? We're going to go over on the higher time frame, my areas of interest. I sent you guys in that screenshot. The first area of interest was the 155,600 all the way down to the 154. So pay attention to detail, because I'm going to show you all in extreme detail how it is that I collected up this area of interest for you all. Again, sending it to you guys ahead of the curve. So we're going to go back in time. I'm going to show you all how I was able to identify this specific area of interest. We're on the 8-hour chart, and we're going to go back to September's price action. We're going to go down to the hourly time frame. Okay, so the specific psychological levels that I gave you all were 155,600, 15400, and I told you all that as long as price remains above 15400, that I will be looking for buying opportunities. So this is specifically why. All the way back at the end of September, you guys can see the institutionalized pattern that I attempt to teach you all, which is a pre-engineered low set in the market, a sweep of that low, a higher low that forms after that sweep of the liquidity, and a higher low that comes in after that. So if we look back on the 27th of September during an Asia session, you guys can see the pre-engineered low in the market. Then during the London session rollover into New York during the manipulation window, we see the liquidity grab take place. And again, this is on the hourly chart, so this is still our higher time frame. So we see New York and London session sweep the liquidity beneath Asia session, grab all the money underneath of these Asia session lows. After that, as soon as we head into the New York session on September 28th, bank and institutions pull price action back in this candlestick, and we create a higher low after the liquidity grab. Now that higher low comes in at the 15400 psychological level. So this is the higher low that I had identified to you guys in the screenshot analysis that I sent, and said, as long as we hold above this, I'm going to be looking for buying opportunities. Now, the 155.600 psychological level came in at the Asia session and London session buy area, where bank and institutions pulled price action back and bought from roughly around, I'd say about a 45% discount from where the bank and institutions during New York session bought from. All right. So you guys can see here, this was the higher low that was created again after the sweep of liquidity. And this was the area of interest where bank and institutions during London and Asia sought to buy from after this higher low, after the sweep of liquidity. So these were the designated areas of interest. Again, when you're looking to buy or sell off of the higher time frame bias, you want a logical explanation as to why price action could come into your area of interest. Well, this was me doing that, breaking down past price action as to why potential buyers could come in. I told you guys specifically in the screenshot, I would be looking to trade London session. Well, if price action on the higher time frame comes down into this general vicinity, which was 155.600, and in the past, London session bought price action from this area, don't you think again that if we hold in the form of bullish support, or we see buyers pick up beneath these levels, they're going to be doing what? They're going to be equaling out their previous buy orders and buying again at a discount from where they bought from in the past. So if we get out of this replay mode and we go back to price action, now I highlighted from the 155.600 down to the 154, and I extended that blue box all the way over to the right-hand side to current price action. All right. And you guys can see how we got that beautiful reaction to that. Again, London session was buying at a discount. You saw how in the past they bought from the 155.600. They pushed price action down on the higher time frame, the hourly, right below the 155.600 cycle level, and they bought price action before passing it over to New York session. All right. So now we're going to jump down to the 15-minute. I'm going to show you guys how I was able to identify areas of liquidity. Again, you want to identify retail money in the market to give you a solidification as to why price action could go in your favor. So now that we have the blue area of interest, which was my higher time frame area of designation where I wanted the market to come down into before I personally reacted to it, okay, again, allowing the market to come to me and not being an impulsive trader and instead being a reactive trader by setting up areas of interest, I also identified on the 15-minute chart that prior to this London session, there were retail resistance sellers in this area. Again, you guys know the manipulation time frame. So prior to the London session, you all can see that there were early sellers above these highs or equal highs, if you want to classify them as that. We know that retail traders are majorly trading retail resistance methodologies. You guys can see those equal highs here prior to the London session. So I identified that as a possibility if we rejected this psychological level for take profit areas or as to why the market could go in my favor, right? Now, not only that, but right when London session opened, we saw early buyers flood the market right before we broke out of the manipulation window. So I identified that as well. So we have higher time frame discounted areas of interest. We have a reason as to why the market could target retail money above highs. Another reason as to why the market could drop a little bit lower into our discounted area of interest that we identified on the hourly chart. So now that we have those things on the 15-minute, all I did was I scaled down to the 5-minute and the 1-minute to look for the market maker pattern that I attempt to teach you guys, which is a sweep of a low. Okay, again, making sure that you guys, once price action, okay, if it's bullish over to the left-hand side, you're setting up your higher time frame areas of interest in the form of discount, right? You're waiting for the higher time frame to pull back into that discount. And then once the higher time frame, this is the hourly price action, pulls down to that discount, you're scaling down into the 5-minute or 1-minute price action, and you're looking for this pattern. You're looking for a low to get violated. You're looking for a rejection of a major psychological level or a minor that breaks previous market structure. And then you're looking to get in on a pullback. Okay. So this is exactly the type of price action that I was seeing during this London session. Check this out. Okay. So again, we have early retail resistance sellers prematurely entering into the market prior to London session. And we also have early premature buyers who are attempting to guess bottoms and not waiting for fractal break of structures and chasing bullish candlesticks. Early buyers beneath lows. We have our higher time frame interest here at CYPRX, and we know that we allow the market to come to us and give us that market maker pattern, rejecting psychological levels before we react. So you guys can see right down here, the market dumps out of the manipulation window, comes to attack those early buyers. Now, after this low is attacked, check out what happens. We dump straight down into a major psychological level, 155.500. And after we do that, we reject it, fail to have a bearish close below. What is one of the major things that I teach you all about psychological levels? If we fail to break majors, specifically majors, okay, they play a much more important role than minors. If we fail to break a major and we don't hold bearish price action below or continue bearish price action below, that is a logical explanation or a reason as to why the market could go higher, because the market makers have no interest in pushing price lower. That is a signal to us as CYPRX traders that the market makers have an interest in higher price targets or retail money, right? So that's the first signal that I got. The second signal was after we rejected the 500 once, we created a higher low above the 500. So right here, again, we have a sweep of liquidity, rejection of a major psychological level, and a higher low that gets formed that holds bullish support, or if you want to call it that, bullish momentum above a major psychological level. After that, all that was left to do was wait for a break of structure and a pullback. And as you all can see, we tested the 500 once, twice, 3 times, then we rejected it. That led to a market break in fractal structure. So once I got that break in market structure, I jumped down to the 1 minute. This is where we're going to get that sniper entry. Okay, you guys saw from the screenshot that I sent you all, my entry was roughly at around 155.615. So I entered in with the buy stop, and I'll go over that here in just 1 second. All right. So you scale down to the 1 minute chart. I told you guys 5-minute time frame. We saw that break of structure. That break of structure was right here, and that's after the market rejected the 500 psychological level. Okay, so now we have that higher time frame, i.e. the 15-minute low that was pre-engineered during the London session manipulation window. As you guys can see, look down at the bottom of my chart. Okay, this low falls into the London session manipulation window. All right, we dump straight down into that area of liquidity beneath pre-engineered lows in the market, that higher time frame blue area that we identified on the hourly chart all the way over to the left-hand side from September's price action. We've rejected a major. We created a higher low, not only once, but the market makers tested buyers' interest and tested how many sellers were left in the market. That's what this double test was, or that's what you can start to see this as. We see sellers get overtaken by buyers not only once, sellers come into the market again, and they get overpowered by buyers again a second time, except this time that leads to a market break in structure. So now we have a higher low after the sweep of liquidity. All I did to catch this sniper entry was I took my Fibonacci from the low, again, properly drawing your fib on from discounted prices to the high. I extended that over to the right-hand side, and I waited for price action to come into 70 to 79%, respecting a hold above the major 500 psych level. I put a buy stop right above this lower high to enter me in, at the 615 psychological level, and I rode that wave. Now, I want to talk to you guys about the take profit areas and the higher time frame discount that I was also seeing, which gave me even more confluences. So number one, you guys can see here how the market makers came and they immediately attacked all the liquidity above these early seller resistance trader highs prior to the London session. That was the first area that the market makers came to target. They tapped straight into the 157.200 psych level and cleared out all the sellers that had over-leveraged positions above these highs. Now, not only was my fractal Fibonacci in tandem with my higher time frame analysis, but if I go back to the 8-hour time frame, I believe this is something that Odevod posted into the chat. Hopefully I'm pronouncing your name right, bro. We go back to the 8-hour chart.
Ovidio.
Ovidio, yeah, that's a good one. It's a good name. Very interesting. Okay, he posted this in the chat. Check this out. If you go back to that September price action that I was just mentioning to you all, and you take your fib from the low all the way up to the high, why? Because we broke this previous market structure right here. Okay, and this is again on the 8-hour chart. So you're having your higher time frame bias in tandem with your lower time frame bias. You guys can see that on the higher time frame, we were in roughly 70% discount from where the banking institutions bought from previously back in September. Okay, so very beautiful analysis. You know, CYPRX confluence to the T. I attempt to try and send you guys the screenshots and the analysis ahead of the curve whenever it is that I'm attempting to involve myself in the market. I like to do that at least once per week for you all, or if not once per week, every other week. You know, nothing that I constitute as financial advice. However, when I send you all an analysis, it's usually because I'm very sure that I'm about to take a trade. Okay. So any questions surrounding this specific trade breakdown?
I won't stop till I hear him say